Money never sleeps, pal.
Hey there, this is Pete Townsend from Norio Ventures, and welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by PAT FinTech, the training partner that demystifies fintech and digital finance for financial services professionals. We've got Yoann Turpin on the show this week, who is co-founder and head of business development for London-based Wintermute. Wintermute is a leading global algorithmic market maker in digital assets, and they create liquid and efficient markets on the world's best crypto exchanges and trading platforms. Yoann's got a really unique background that I wanted to explore a bit to find its path into digital assets. So let's just jump right into the flow of the chat with Yoann Turpin on this week's episode of Money Never Sleeps.
Money never sleeps, pal.
So, Yoann, listen, we connected back in October after an intro from Graham Rodford from Archax. We didn't get to chat all that much until after I had my foot surgery. Never mind me being medicated, right? But you were also going through your Series B round, and congrats on getting that done. But it's taken us about 3 months to have this chat. But you know what? Given the world that we were both in a few months ago, you and your Series B and me with my foot in the air, 24/7, I think we're doing all right. Yeah?
Yeah, it feels like yesterday.
It does. And, lots of good connections and crossover between us and the different folks that we know. And Graham Rodford is an unending supply of wonderful intros. So shout out to Graham. I know you, I think it was a 5th or 6th degree of separation between you and Graham. Somehow met him, but I think it was Ivilo Jordanov, who's an investor in Wintermute. And Ivilo also knows Graham well. And I know Ivilo, we had him on the show last year. Shout out to Ivilo as well. But getting started with you, Yoann, listen, thinking about talking to you tonight, and it is 9:13 p.m. on the 2nd of February as we're recording this Groundhog Day. Punxsutawney Phil went back into his burrow in Philadelphia, and so that means there is 6 more weeks of winter rather than early spring. Do you know Groundhog Day and how that works?
I've seen the movie as a kid, yeah.
Okay, good. Yeah, always a great movie with Bill Murray, but
yeah, very, very fitting to lockdown or whatever 3.0 already.
Yeah. I know. And yeah, it is the same day every day. But anyway, listen, I think obviously had a look at your LinkedIn profile and saw a path there that I thought was quite interesting. You've got quite a unique path, but I can see that it makes sense to what you're doing right now. If you think about your origin as an FX OTC and fixed income options trader, then running what looked like a hedge fund, then in 2014 moving into more of what I would call a portfolio career. Someone said to me a couple of weeks ago, angel investor, advisor, and then Wintermute. Can you just talk us through the different key steps along the way that got you to this point?
I think, it depends on how far back you want to go. So I think to really understand the path, you have to go back to my childhood having been, a competitive swimmer.
Okay.
And understanding, I think, 2 big lessons from that. One big lesson is resilience and, training 3-4 times a week and having essentially spending a weekend out of 2, racing. But also an interesting element that I've seen in many traders. Some of the wins are really marginal, but they have a very binary outcome. Swimming breaststroke and backstroke and hitting the wall. Basically, you basically have a few milliseconds, and if you're fast, it's great. If you're second, you might just be literally a few milliseconds behind the first, and it's been interesting learning quite early on to actually see that even through business schools and through actually the first selections for the first positions, where probably my first job in FX was very much due to having been quite adventurous with the first internship, where I managed to convince the business school that I would sit at home, trade futures, and write down basically research for 3 months. Didn't get a full grade because I wasn't working for a company, so I didn't have like a company profile. So I'm still a bit annoyed with that. 20 years later.
Yeah.
But that led me to the marginal win that was basically getting the FX position and at Société Générale that had hundreds and hundreds of applicants. And also learnings from another marginal win at Optiva, where so I started Optiva 3rd of April 2006, and I started on a desk on the 29th of June, I think. And I was basically from barely 3 months in, I was already building a desk on the bubble and chat. So the 5 and the 2 year German bond. That marginal win there was that I was a French guy who could speak to the French brokers, but had a good enough English. It came from an overlap of different skill sets, which were just completely unrelated. In terms of what led me to what was called Salamander at the time, so that my first partnership in trading, Optiva had grown a lot when I was over there. So basically, there were about 250 people when I joined them, and there were about 1,000. Well, let's call it 700 people when I left. Essentially, there was a lot less space for people who were quite entrepreneurial, who had built various desks and activities. So the entrepreneurs, which actually, funnily enough, has been sort of the same path for Evgeny, my co-founder at Wintermute. So he built the ETF side, and I built more option desks.
Okay.
But so that was about 2010, and then basically Optiva had a tricky 2009, and then came the decision for me to just do something a bit maybe slightly away from prop trading and actually move into more the hedge fund space or the family office space. And that's why I basically moved to London. So from Amsterdam, I moved to London. So I was 28 at the time, so I set up Salamander, essentially a hybrid between a hedge fund and a prop trading house under a family office, with family office money that had option trading experience, that really understood the product, longer term volatility arbitrage and rates.
Okay.
So as complex as could be. One of the lessons there was just probably not as scalable as I would like it to be, and then a lot of learnings as an entrepreneur in terms of investor founder alignment. But we can discuss that.
Oh yeah.
After that is basically I sold that, or I exited that, took my shares out. So not necessarily retirement money, but more like house money as such. So that actually allowed me between 2014 and 16 to be more or less full time as an angel investor.
Yeah.
And what you alluded to as this portfolio career, that's been quite interesting in terms of learning and leveraging networks and articulating a certain value proposition for teams that I was investing in. I could see that many of the CEOs of startups would spend 80% of their time essentially fundraising, and I could do that better than they could do. So I ended up creating another company that's now been taken over by a family member essentially, but it's another factor. So, and that the premise of Kaifuku Capital was very much if you're investing in early stage startups like you do, you see that actually some of the founders spend an incredible amount of time just not focusing on their product and their team and building their own market, but spending a bit too much time early stage just raising funding.
Absolutely.
I was also helping teams around business development at the time, and I found it incredibly insightful to help with BD, because you could introduce, especially so for more background. So I would mostly invest in B2B. It turned out that it was just nice due diligence to just go and introduce the founder before you would invest, introduce them to a corporate or so, and just and see how they would sell.
Yeah.
And a few times I've got probably 3 or 4 examples out of 30 angel investments where I ended up swapping essentially what could have been just an advisory fee for business development into equity, and then just helping them along the line, and actually for 3 of them helping them raise funding later.
Okay.
So I actually got I took that business seriously enough to have it regulated between 2014 and 2016 or so. Stopped the regulatory cover essentially 2016, because then I moved back into the office, sort of the family office space, doing a JV in the equity space. And this is how I came across more cryptos closely.
Okay.
There's another little segue. So when I was angel investing and building Kaifuku, I've also invested in 2 startup studios, which I found were interesting ways of de-risking the product stage and the ideation stage.
Okay.
With all sorts of discoveries and pitfalls as well. With startup studios sound great on paper in the way that you can reduce the cost of making a product, but it's actually incredibly difficult when you have the product and you feel like, there's a market fit, but it's incredibly difficult to go and find a team with, especially you're trying to get founders behind a product a bit too far down the line, is essentially. So finding someone to take that over and really carry it with vision for 5 or 10 plus years, that's incredibly difficult.
It is.
So So that was also one of the learnings, but ultimately that then increased the level of insights and experience around early stage, and especially what I like to call qualitative data. So basically anything that just depends on you assessing teams
Yeah.
and people.
Interesting that you call it qualitative data, but it is from a trader's mindset, right?
Yeah, so it's me just retranslating things into more the macro hat when you just go and
Yeah.
read some news, or you try to see what try to understand what a human would do behind the screen, or just it's just more trying to guess behaviors as such. But essentially, that's what led me to cryptos. I stumbled upon it in 2013 or so within my first venture, because one of my partners, basically he was just checking Bitcoin prices, and he thought that we should be market making it. But I thought that 3 weeks to get $30,000 out of MT Gox was just too small and too long.
Yeah.
There would have been a lot of learnings from losing money on MT Gox,
Mhm.
but essentially we went back in 2017. So I was building this joint venture with this family office. It functioned a bit like a hedge fund hotel. So you had a lot of teams, trading their own books or so, and you had their own macro fund, but also one of the partners there was also looking at cryptos all the time. So we reviewed together about 56 different ICOs that year.
Mhm.
He essentially suggested to me towards the end of 2017 to manage a sleeve of the macro fund that would actually be dedicated to cryptos.
Okay.
I broadly said yes, under the condition that I would find another trader and essentially a CTO or someone to really build more tech around more quantitative approach this time.
Yeah.
But still with the fact that it's such early projects, such early stage projects, that actually end up with very qualitative aspects to it. So the framework that you can use to go and figure out if a crypto project is interesting still remains around qualifying what is a problem big enough. Are they solving it the right way?
Yeah.
And if they're not necessarily solving it the right way, are they just the right team to pivot, and at least the best team to do it a certain way? And these things just seem to hold both in the VC world and very much hold in the crypto space. And it's true that in cryptos you might have a few skews just due to speculation also, or due to the makeup of certain tokens. Price in the short term might not reflect the quality of the team, but
Yeah.
in the longer term it does shine. So yeah, in a nutshell, that's really what led me to co-found Wintermute towards the very much decision towards the end of 2017, when the portfolio carrier, as you call it, proved to be extremely helpful to building Wintermute, because it's really helped complement Yevgeny's skill set. It's his first company, but in many ways it's his second company, just because he built decent structure within Optiva.
Okay. Really interesting. And I'm just hearing this and, looking at it, your LinkedIn profile and seeing this path, and you've now confirmed the path for me that makes so much sense. But it's a real interesting combination of the swimming competitiveness that you got from a very young age, right? I was a breaststroke swimmer as well in high school, and ended that career at the age of 17 and left it behind me, as I should. And the mindset of a trader going in and having that be the formative years of your career, but then shifting into, like you said, this qualitative data of being an angel investor, working with startups, helping them to sell. I love that as well, where you just throw a founder into the deep end with a potential customer that you've introduced them to and see how they sell. It's wonderful to do that. So much fun. It may be nerve-wracking for the founder, but it's fun for me. And then kind of converting that into, okay, you've got this natural competitiveness, you've got this mind of a trader, you've got this nice background now in startups and in early stage investing and helping startups, and saying, well, I'm going to bring that into the crypto space, one, but also let go of that portfolio career and go back into something full time.
Yeah, it took a long time for me to interact with many teams to pick Wintermute as such.
Yeah.
And I think the main reason why I did is because my first venture had been, still had been a success to a vast degree. And I think I still associated that with the fact that two of my co-founders there were from Optiva as well. So there was a serious level of selection beforehand. What I had made it easy is for my first venture, my two co-founders were essentially juniors of mine that I had worked with for about 2.5 and 3 years. And then if you really know people, they were just very good at just filling some pretty essential gaps in all the things that I can't do, which is just super useful. So it's all about, and and especially in those things, being much more competent than I would be.
Okay. Okay. Interesting.
When Evgeny asked me to join, it was very much about the sort of the quality of the people, and I think something that it's very difficult for people to see from the outside, but the Optiva has a pretty strong culture of knowledge sharing, where they actually just push that inside the company in terms of having a completely company-wide bonus pool, which is good and bad in some ways, because if you really, really outperform in that, you might feel frustrated that you're actually funding other people.
Yeah.
But there's always, because of that, it goes against actually all sorts of siloed models that you find in trading in general, or even in banking, where people just depend on the P&L of their own desk, and then just tend to be very cagey and very sort of protective about what they do, which is just counterproductive, especially when you think about trading, and information should be gold, and sharing that. If you have a company that has silos everywhere, I mean, you can't really expect people to share information, or simply just share good practices.
It's the beauty of the startup, is that the silos are pretty much gone.
Yeah, so with Wintermute, we've reinforced that by having everyone as a shareholder. Half the team could work for a hedge fund, but because of the equity element and the startup element, I think they're very much there to build more value, short and longer term.
Okay, can you tell us about the Wintermute business today? What it looks like, and what you think your longer term vision is for digital assets and crypto overall?
So what it is today, it's essentially, I think we just crossed 20 people. We finally hired yesterday. Actually, finally, I have another person for business development
Nice.
to help me out.
You're a sales manager now.
So we'll be able to sleep more than 3 hours a night. I mean,
Nice.
I don't think that will be the case. It's just the pipeline will just fill up quicker. So it's about 20 people. It's about 1.5 million trades a day. It's about $2 to $3 billion of cryptos that we trade every day.
That's a lot.
So it's becoming a real business. Yeah, it's becoming a decent business. In terms of what we cover, we're still very heavy in spot. We still cover 80% spot and only 20% delta one derivatives. So essentially the futures and the perpetuals.
Mm-hmm.
In terms of where we're going, we mostly on centralized exchanges, and we do as much as we can in DeFi. But I think we'll very much push to do more in DeFi and more collaboration with projects, and hopefully even slightly further beyond just Ethereum. So we do a lot in Ethereum. It is probably that we've done a good amount with like DYDX and so on, but we're quite active on Uniswap and essentially the main DeFi pools.
Okay.
To answer your question on the shorter to sort of the medium term.
Mm-hmm.
Shorter to medium term is going to be about us, starting to cover many more directed counterparties. So essentially now we trade through exchanges or through DeFi, but we're building our own API, and then basically, so we have an RFQ that's existing.
I saw that.
Essentially an automation. It's an automation of an OTC desk. We're not fully streaming yet, so it's more, we're building that, but we'll be there in a couple of months. So it's probably going to look a lot closer to a business like probably earlier, more like a jump in terms of not hundreds, but not too many large counterparties, and then we'll make a choice if it's more like a Citadel business and have many direct counterparties.
That's big. Yeah, you just triggered a thought there when you said the word Citadel, of what's been happening the last couple of weeks in the traditional markets, shall we call them.
It's actually an example that I use that I'm more carefully using, is that the Citadel and Robinhood, because it's one of the features of the potential features of cryptos, though, is by having as DeFi develops. So okay, if you take a step back, the reason why we cover both CeFi and DeFi is because CeFi gives you price discovery, and DeFi gives you just removes the custody risk.
Mm-hmm.
So you have a contract risk, but you still have you do remove the custody risk. So something actually that does look like Citadel plus Robinhood, but probably more competitive at the Citadel level, because I think the levels that they have is probably is it a 30% market share or so.
Yeah, it's massive. But what I've thought over the last number of days is just all this pandemonium that's taken place. And my co-host, Owen Fitzgerald, who can't be with us tonight, he kind of pointed out the GameStop thing to me last Monday when it was started to really bubble up, and we covered it on the podcast last week. But what I've been thinking about is that what all of this has pointed out is that the main traditional markets still have so much old school infrastructure and a value chain that is just ancient, that because the trade and the settlement are not the same like they are in crypto. And there's so much opportunity there to move it forward. And everything that folks like Wintermute, you guys are doing, is kind of laying the groundwork for that. And to compare it to everything that Citadel and Robinhood are going through right now, I mean, it's just and the hedge funds that that are getting squeezed. Just it's really eye opening as to when you think about how crypto operates. There's so much opportunity here just to completely transform things in a way that can create brand new value opportunities for the masses, which is really exciting for me.
So there's many points to address, and so many things to bounce on what you just said. For the ones who haven't seen it, actually, it's not for our Series B, but for our Series A. Jeremy from Lightspeed, who led the round and basically pushed everyone out and just took the round for himself, wrote a really nice piece about what we were doing at Wintermute, which is essentially just paraphrasing what you said in terms of making crypto markets more efficient. But I think he phrased it as Wintermute, make sure you don't get ripped off when you trade crypto, something like this.
Yeah.
Which I believe is strongly the case, because if you look at our margin, yes, we trade a lot, but our margins are generally the basis points, which are not actually that not that far away from traditional finance, where it's just a few basis points. It's not a few percentage points like on Revolut. There's all sorts of challenges, especially for smaller amounts. The gas fees are not that cheap, so you have layer twos, you have solutions to just go and facilitate crypto transfers for smaller amounts. But I'm not surprised that it might look like if you try to do $50 of Bitcoin, you should pay nearly 10% fees, because it will probably cost $5 or $6.
Oh yeah.
That's clearly one of the downsides. I think the Revolut piece on it's actually I know the team in Ed and Nikolai and so on, and I know they're doing as much as they can to give access to the crypto space to as many people as they can. But it is much closer to the traditional finance space than it is to cryptos. Just because the way you would buy cryptos through Revolut, typically you would trade against Revolut essentially, and then themselves they would just go and hedge themselves against people like us through, and I believe it's public information as well, but through Bitstamp in Europe mostly, and then through IDBIT in the US. So Revolut very carefully, they've had enough challenges with the FCA in the past, so they've very carefully took two very decent, regulated exchanges. Not necessarily the most liquid, so actually it's not really about execution in that case. Even if the volumes and especially Bitstamp has grown quite a lot recently, so it is improving. But it's the way you buy cryptos on Revolut is very much the same way that you buy shares with your broker.
Yeah.
So if you buy shares with your broker, you can't send it to your neighbor or to your friend. You can't send the shares back. Well, actually, in cryptos in general, that's the whole point.
Yeah.
You should be able to do that. They've only increased the scope of the coin coverage. They've increased. I haven't heard anything for the last couple of years or so about them really opening the wallets and making those coins transferable.
Yeah, I think if anybody might do that, it probably would be Revolut, right? In that, with the amount of, I don't want to say new directions that they're going in, but that they're kind of looking at how much of this can we bundle together that is going to be relevant to our customers, right? And like you said, make it just as easy to hit on that tab in the Revolut app that says stocks or shares, and that says crypto, right? And you feel like it's the exact same experience, and you make it accessible for people and make it easy. The idea is that when you want to experiment around things like this, and you've got a little bit of money in your Revolut account, you could jump back and forth between shares of a silver ETF, cover the latest Wall Street bets subreddit, or back right into BTC. Fine, whatever blows your hair back. But I'm going to do it a different way myself, right?
I think there's been different barriers to crypto adoption. And one of them has been, people feeling secure about, exchanging addresses and so on. And I think, they solved that at least. Custody is another thing. but essentially it does need some getting used to.
Absolutely. Anyway, listen, you mentioned your Series B before, right? And from the point of view of those out there in listener land that are from the traditional capital markets,
Mhm.
doing a B round in a business like Wintermute makes you guys almost village elders, right? When they're like, "Whoa, Series B, you guys, you've been around for a while." But from the point of view of those that have been in digital assets since before 2017, you're still, you're still kind of young bucks. How do you position Wintermute differently depending on whether you're serving traditional capital markets and those that are getting into more of an institutional crypto play versus those that you may be working with that we could refer to as, the OG of crypto, right?
So you're completely right. So we're not Satoshi. That's and I would say though, so we've been through a few cycles at least though. So
Yeah.
coming from Optiva and even coming from the buy side, I think the traditional players and so on would always perceive us pretty positively. On the crypto side, we get pretty decent reception from the crowd that we want to attract anyway, in terms of like our view of best practices and our view of sharing long-term opportunities, but staying as far away as possible of anyone who does anything that would be forbidden in traditional markets. Essentially, anything like pop and dump or wash trading and so on, which we find is just it just doesn't help the space, and it essentially anything that implies fake pricing and so on. It's just very easy for people to think, well, if the price is fake, then maybe the team behind is fake, and then everything is a scam and so on.
Yeah.
It just doesn't really help build any form of trust. So that is actually quite appreciated by the OGs, as you said, or I think there's another aspect that's been quite appreciated by the community, is the fact that actually we did our first rounds and so on during crypto winter, and the way I normally picture it is like, so I'm imagining this pond with fish, and there's a lot less fish in the pond as the
Yeah.
crypto winter goes on, and then you end up actually dealing with any strategic partner that we got through 2018 and 19. Actually, typically blockchain.com, I got a lot closer through 2018, even if they came through just like many others, they came through this portfolio carrier or network or so through startups from years earlier. It was much easier during these harder times to actually just get have build good relationships and long-term relationships with people who had gone through themselves through like 3 or 4
Yeah.
up and down cycles. And I think that's been appreciated for quite a long time. So after this, we did get. I think it's always better when people hear it from someone else. We've always been quite lucky in getting some advisors, also some people who were happy to vouch for us, and in any cycle, and even in prop trading, and when I started in Amsterdam in 2006, while I was already there, I was late, like I don't know, first probably 5 or 6 years too late already. So you're always too late for a cycle. It's
Yeah.
easy to flight and so on. It's just I think it's just more important to focus on the future and then just make sure that you can add value, and then
Absolutely. It's an interesting kind of context out there in the market. And again, it depends upon the angle that you're coming from, where, there are folks out there in the market where you talk to them about even things as well, basic to you and me probably, as distributed ledger technology and, enterprise blockchain and things like that. And they're like, "Oh, do you mean, the Bitcoin blockchain? Isn't that not fit for purpose for the capital markets?" I was like, so 6 years ago, just we can bring you up to speed a little bit quicker. But even folks like Ray Dalio, right, at Bridgewater Capital, the hedge fund,
yeah.
right? I would think back in December, he got a bit panned for some of the comments that he was making about Bitcoin. And he genuinely went back to the drawing board and did a dive, or had someone, within Bridgewater also help him do that, and came away with some more intelligent views on it. Perhaps still a little bit misguided, but at least he's willing to learn and move up the chain, which is great to see. That
He's quite. I've always admired Ray Dalio because it's the way I was training, and maybe just to echo my earlier comments on the fact that Optiva has really decent sort of work culture. Is there's an element of the Dutch culture that's super honest and very straight to your face feedback. That's actually quite similar to this And I constantly forget how Ray Dalio calls it, but like the
Radical transparency.
radical transparency. But essentially, just says the same thing. Is that if people, tell you really clearly to your face, "Oh, you're doing this right or you're doing this wrong," then you generally should be able to learn faster.
Mm-hmm.
And it's in his space like ours, it's just it remains a competitive environment. So if you can learn faster than the neighbor, even by 1% every year or so, then you'll still do pretty well long term. So it's but it's always good to hear people like this, especially on the macro side. I think it's you get, if you think of traditional money, institutional, traditional finance coming into the crypto space, VCs were there probably from not day one, but I'd say 2012, 13 or so, quite early on, just because they have the mandate that actually gives them, rewards them for being more adventurous and especially looking really longer term. Then you normally get more the macro funds like the Tudor and the likes or so, because they think about the Fed printing too much money and then that money having to go somewhere else and sort of be off a desert and negative yields everywhere else essentially. So actually, I would have put Ray Dalio actually more in that category about thinking about macro cycles with the whole the whole theory he has around debt cycles. But then I was even really happily surprised actually last year with even insurance companies, which are just the most conservative institutional investors that you can think of. Normally it's like zero volatility, I want to get 2% a year, and then suddenly they actually even start to allocate to it. So it's
Mass Mutual, where I hail from. I owned Mass Mutual stock back in 1987, right? After the movie Wall Street came out, I was a little bit interested in what was going on. And my mom worked upstairs. Her law practice was upstairs from a stockbroker in Springfield, Massachusetts, Kidder Peabody. And she brought me downstairs, and I used my paper route money to buy into Philadelphia Electric Company and shares of Mass Mutual back in the day. So, and it's great to see Mass Mutual now in crypto, which is just awesome.
Yeah, between them and and Guggenheim and so on.
Yep.
It's obviously small amounts. It actually shares some light with the comment you made on distributed ledgers and so on, and people slowly just getting about familiar with Bitcoin.
Yeah.
But they can't get really familiar with a network where you can build smart applications and so on. And it's for that to go through the investment committee, that's going to take a bit more time.
It will. I like to look at this sometimes as, being able to say to a big institutional investor, listen, you kind of have to get your head around digital assets. Here's probably the safest place to start is with Bitcoin, right? No matter how, that comment may be perceived differently depending upon the audience and who's listening, right? But it's the truth, right? This episode of Money Never Sleeps is sponsored by PAT FinTech, demystifying fintech and digital finance for financial services professionals. PAT FinTech enable financial services professionals to transform their capabilities into the digital age, with dedicated virtual training programs geared towards those that can develop, deliver, and monitor optimally customized user experiences balanced by appropriate governance, control, and oversight. To learn more about PAT FinTech, go to moneyneversleeps.ie/PAT FinTech. Back to kind of your rounds, and when you and I caught up in January, we talked about the synergies between portfolio companies and VC firms, right? And how your investors can be a great source for referrals. Can you shed any light on how that works in practice?
So I think you're referring referrals actually to a specific part of the business, which is we trade completely market neutral. So what does that mean, market neutral? It means that we're not aiming to make money from cryptos going up and down, up or down, but essentially we need to borrow most of the time those tokens. We cover many more altcoins than most of the competition. It also means that we have to either interact with foundations earlier or have a whole range of lenders that somehow cover enough of the spectrum to be able to borrow those tokens. It often also means that we want to interact with the projects earlier, and who interacts with projects even earlier than market makers is essentially the VCs or so who put the first money into the company. There's different interesting elements in terms of interacting with VCs to get closer to a team and establish a relationship of trust is that VCs themselves, through their fiduciary duty, will have to do some reasonable amount of due diligence. So it's a nice validation on our side. A lot of VCs tend to be local, regardless of the crypto space being quite global.
Mm-hmm.
We were global from day one, thanks to, there's still some regulatory arbitrage, but at least thanks to the porousness of, just being able to integrate with, many exchanges, especially from the UK, where you have easy access to the US, you have easy access to Asia. The team can be built on Monday. On Thursday, they just publish the white paper, and then on Friday they receive the money, and then on Saturday they list.
Yeah.
And it's just essentially it moves too fast for any organization. So even VCs nowadays are becoming a bit overwhelmed. So I think sharing some of that work, us recommending teams as well that we find are interesting and so on, especially when you deal with future dexes and so on, where we think the tech looks interesting.
Yep.
We can revalidate. But vice versa, if there's a problem or a longer term trend that we haven't identified that a VC has identified, then it's always really good to hear. It's just a cross validation, really.
Yeah, that's a great point, Yoann, because I say to a lot of folks that listen, if you want a trend line on where things are going, and I'm just going to stick with, the financial markets here in terms of not necessarily performance, but in terms of asset classes, in terms of infrastructure, in terms of, you name it. Just look at what the VCs are investing in, right? Look at the technology, look at the value propositions that they see as being believable, look at the problems that are being solved. And whenever I have naysayers, I just say, listen, look at this portfolio. I'm not saying all of them are going to be winners, right? But it takes a lot of expertise to be able to assess these investments. So if you've got a pretty good VC behind you who is making a lot of investments in the same space that you're in, they're going to be spending a lot of time looking at the space. So the closer you are to them, the better.
Yeah, so we've even pushed the model a bit further recently, where we now have an agreement with our board that we can actually invest in about 20 companies.
Okay.
So DYDX was the first one that we declared, just because so anything we would do would remain quite strategic. So it needs to be fully aligned with the business. It's a balance sheet investment, and it's not. It remains it's not millions per company. It's more a few $100K per company as such. It feels like on one side that we're helping go a bit higher the funnel and just be more aware of teams ahead of time, but actually as we see GSR, Lamida, and CMS and everyone else doing the same thing, I think we're just rebalancing and just keeping the
I know.
system comparable and flat enough.
It's like how much more can you outdo each other in terms of getting closer and closer and closer to the inception point of some of these things, right? Like I forget who it was, but a VC in the US wrote some LinkedIn algorithm that looked at a bunch of profiles of people who they thought might become founders of companies just based upon their LinkedIn profile alone, and then invited 100 of them to an event, and on that basis. And it's like, okay, if you think I might found a company and you want to talk to me about founding a company, then hell, I might go. And I think something like 80 out of the 100 went, right? And out of those 80, I think 15 or 20 ended up forming companies that VC invested in. So it's like going to that inception point, and like you said, because it can move so quickly in this space that, yeah, it's a lot to keep on top of. Thinking about your past experience, the word founder or co-founder appears in your LinkedIn profile at least 4 or 5 times, and you've talked about your backstory quite eloquently, Yoann, so thank you. But can you think of a key lesson during your time as a founder or co-founder, and now obviously as a co-founder of Wintermute, that drove really a big learning in your entrepreneurial experience?
So one key lesson as such, there's many out there, but I would say one really key lesson that I've learned through my first venture, very painfully, was picking your investors very carefully in terms of I'm not saying that they were bad at all. They're pretty decent and understood what we were doing. They had a much shorter term vision when we had a really longer term vision of building a business.
Mhm.
And because it had this hybrid structure, as I mentioned, the hybrid between more of a macro fund and a prop shop, it also led to more confusion about us receiving investors who are probably more shorter term orientated than longer term. While we were there to actually build a company, for the following 5 or 10 years or so, and not really building something for the next 3 months or so. And that really led me to actually not take external money. We took a bit of external money on the startup studio side, take zero external money for the startup consulting, but especially for Wintermute, it was very important. Even if obviously when it was created, it was 2017. It wasn't too far fetched that for us to do an ICO, but we made a very conscious decision of actually only take equity investors for the long-term alignment. And that's very much helped align interest, even in terms of some of the investors. I mean, you mentioned Lilo, so Linus has been pretty key. People who were able to genuinely advise and so on, and also be a lot more tolerant of a few iterations or so around the business model. Because actually, we raised the first round on a business model that we flipped, basically 2 months later we were doing something else.
Yeah.
and these things are only really tolerated by equity investors, but they would absolutely not be tolerated by more of a hedge fund title. They would how is it qualified in the hedge fund space? Is like style
Style
switch
drift.
or style drift. Yeah, it's like the biggest
Style
insult you
drifting. DeFi projects. That's all.
Style drift is probably the biggest insult you can give to a fund manager.
Yeah.
You're basically telling them that they're out of the mandate that you gave them, and they're not managing the money how they said they would.
I got some stories from the old days around style drift, but that's another story for another day. It may be illegal if I share that story.
I don't know what the story is.
I had nothing to do with it. Trust me.
But that was really key, because this is essentially what led me to negotiate my way out of my first company for like a year, to reduce things like non-competes and so on, and wasting everyone, like just a lot of grief and time wasted for not much reason. It also led me to be that portfolio career stage, as you referred to.
Mm-hmm.
It was a very, very nice way to have a buffer to make sure that we had many opportunities in terms of who could invest in Wintermute as well, and in terms of making sure that we had the right fit there. And it's also helped us, so this very long-term focus really helped us to focus in DeFi before it was popular, for example.
Yep.
So no, that's been one really key learning.
Yeah.
There's other learnings, but
yeah, that one, that one can be quite important, right? And that aligning interest with your investors can just be a big relief of headache, because I'm working with folks where they need to go back to their investor 2 months after the seed round and say, hey, listen, we're going to shift this a little bit. And they're kind of like, well, yeah, it's 5-10 years, so we expect you're going to move a little bit, which is good to hear from supportive investors. But it's, and that, during your portfolio career, how many startups do you think you looked at? Do you feel like repetitions matter here?
Oh, so, yeah, thanks for pointing that out, actually, because it's I stopped counting after 3,000, so I think it was a year and a half in.
Yeah.
And then my ratio was about 0.5%. It was 1 out of 200 that I would invest in. So you could sort of guesstimate around 6,000 or so. And then obviously it's a strange phenomenon in terms of the pipeline. It probably took me a year and a half, depending on the geographies. France actually took a really short time, because I had the right network level through a friend of mine who was an entrepreneur in France. But the pipeline in the UK to get tier 1 deals took me about 2 years, where you go to people, you reach out for 2 years, and then after 2 years it flips and people start to really reach out to you. So it's more about from 2016 or so that I still receive really decent deal flow. And it somehow continues to improve through VC friends who find like a really decent team, say, oh, it's a bit too early, or it doesn't fit in the fund, or so, or essentially we don't have the fund is not actively investing, but they continue to receive deal flow, and then they see a good team and they want people to invest. Yeah, essentially, because I think tier one deal flow is essentially through entrepreneurs also that are able to assess the quality of the team, and it's also depending on the sectors or depending on the business model. It's also the perceived added value from typically me being having advised also on top of investing. So probably
big time.
I had been on before Wintermute. I had been on about 14 different boards. And ultimately, to probably the point that you want to go to is it's really been helpful to articulate a certain value proposition. Even if every time it's your own venture, you tend to get too much into details, and it's just because you spend 24/7 in it.
Yeah.
But it's been helpful to get feedback from a few friends actually who've got more of a marketing background, who were just telling me at the start of when we were raising our first round that it might feel like a fallacy, but you just really simplify. You purely sell the story. You do not explain what you do, or you don't explain how you do it. You just sell the vision purely. In about 5 minutes. Essentially, it's just we're making crypto markets more efficient.
Yeah,
and especially not get lost in the detail, because then people start to think that they understand what you're saying, and then they don't, and then they don't end up trusting you. Well, actually, if they buy into the vision, and they do buy into the fact that you're the best in to solve that problem, then you end up with an investor.
Absolutely. Yeah, I was talking to Jonathan Hung from Unicorn Venture Partners in California the other night, and he said, in this world, there are simplifiers and complexifiers. And he confessed that he didn't even know if complexifier was a word. I think it's a new word, perhaps, Jonathan picked up, which is a great one. He said, in this world, be a simplifier. Right? Keep it as simple as possible. And even if your proposition is incredibly complex and the value that you're delivering, find a way to communicate it clearly at a level that people will understand, Cool. We've covered a lot tonight, Yoann. I think this conversation, like I said, had been brewing for a few months, and we found a few more synergies and crossover points than I thought we might. But I know that you were clearly a competitive swimmer, breaststroke and backstroke, and know a lot more about you after this chat. But tell us, what is one thing that people wouldn't expect to know about you?
Yeah, I think that's something I'm a bit ashamed of. So I'm a fully declared language and culture geek. So I ended up studying about 9 languages or so.
Okay.
It was 6 European first, some very marginal dabbling in Russian, but did a lot of Chinese and a lot of Japanese, probably 14 years or something like this. But I have traveled to a scarily small number of countries actually, so it's very intellectual as a venture. But I've never been to South America. I've been to like 2 cities in the US.
Wow.
I've been once to Canada. I've never been to Africa. I've only been to China and Asia. So I'm feeling quite ashamed, especially since COVID, and somewhere I feel like I was planning for retirement to just go and travel around a bit.
Wow.
And so I've probably studied more languages than countries I've been to, actually.
Okay. Well, you know what? I haven't seen enough of the United States of America where I'm from either, so don't feel too bad about that. Canada is a place to check out. Been to Montreal and Toronto. I think that's it. But Robbie Williams of pop fame, he referred to Canada as a luxe apartment above a meth lab.
I've been once to Canada, but did a road trip over there.
Yeah.
It's just
I'm supposed to be giving out about Canada as an American, but I can't find myself to do that too much anymore. Given what's
there's the nicest people on earth, actually.
A bunch of great people from Canada. But listen, thanks so much for doing this episode with me, Yoann. It's been a delight. I feel smarter coming out of this, so thank you.
Oh, likewise. Thank you. Thanks.
That does it for this week, folks, and thanks to Yoann for opening up his mind to help us figure out why he does what he does. Links and show notes for this episode are on moneyneversleeps.ie, so check us out online. Also, you can subscribe to our Money Never Sleeps newsletter at moneyneversleeps.substack.com. If you're enjoying Money Never Sleeps and want to see it continue, make sure you hop on over to Apple Podcasts and give us a 5-star review. Check us out on podchaser.com as well to tell us what you think, or leave us a voicemail on our website, moneyneversleeps.ie. And don't forget Conan Brophy from Create Sound. He mixes and edits each episode for us and is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I help startups get their products to market, get customers, and finance their vision. You can find me on LinkedIn, Twitter, or at norioventures.com, and you can follow Owen Fitzgerald on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.